In this video I'm gonna teach you how to make money by trading crypto with leverage on the Bitget exchange. To trade successfully with leverage, you guys need two things. You need a profitable trading strategy and you need to apply strict risk management. I'm not gonna teach you a profitable trading strategy in this video because it's gonna take way too long, but I'm gonna show you where to get one for free. All you have to do is to go to our website satsincome.com, like on my t-shirt, scroll down and click on learn to trade crypto for free. By doing this, you guys are gonna get a free course where you can learn a lot of profitable trading strategy. That's how the course looks like on the inside. It is 100% free, no strings attached. There are 150 videos here, between 14 and 20 hours worth of content, right? And here you guys can learn a profitable trading strategy. Not only that, but you can learn a lot more things about crypto trading. The second thing that you need is to apply a strict risk management, and I'm gonna teach you how to do that in this video using our crypto trading journal, which again you guys can get for free by joining the course. So you just have to go to section number 7, effortlessly track your crypto trades with our trading journal, and here you have to click on this link and you guys are gonna be able to get this journal. The journal has built-in position size calculator, trade log where you guys are gonna be entering your trades, statistics tab where you can track your win rate, your reward to risk ratio, average trade time, you can track everything here. A results tab where you can look at your overall statistics month by month. Indicator and strategy tracker where you can basically compare different strategies or indicators. Data tab where you can add the different cryptocurrencies which you are trading. Daily routine tracker if you want to build the habits of a successful crypto trader. And backtesting tab where you guys can backtest trading strategies before you use them. That's very important because that way you get to see if a trading strategy is profitable or not without risking any real money. So these are the two things that you guys need in order to trade successfully with leverage. Now let's get to business. I want to give you a little bit of an overview of what you can see on your screen in case you are using Bitget for a very first time. At the top here there are menus with the different things you can use this exchange for. You can use it for spot trading, which is basically trading without leverage. You can use it for futures trading. You can use their trading bots in order to make passive income. You can also use copy trading in order to make passive income as well. You can do demo trading, which is basically trading with fake money. That's a great way to learn. You can find here futures info, and they also have spot OTC. Below this you can see few of the crypto trading pairs, and if you want to see all of the crypto trading pairs, all you gotta do is to hover your mouse right here and you will be able to find all of the pairs available for futures trading. Next to this you can see all of the data that basically you need to know. You can see the current price. So at the moment we are looking at BTC USDT. You can see the 24-hour change in percentage as well as in points. You can see the current price, the index price, the 24-hour high, the 24-hour low, the volume, and the most important thing, which is the funding rate. The funding rate is basically the fee that you are paying in order to use leverage. What's important for you to know here is that you don't only pay these fees. In some cases you actually get paid this fee. The funding fee is paid from traders to traders. So when the funding rate is positive, like in this case, the long traders pay the short traders. So if you are a long trader right now, you're gonna be paying 0.01% of the leverage that you are using every 8 hours, and you're gonna be paying this not to the exchange, you're gonna be paying this to the traders who are trading short right now. And when you see that the funding rate is negative, it's gonna be the opposite. The traders who are short are gonna be paying this percentage on the amount of leverage that they are using every 8 hours to the traders who are long. So again, you don't only pay these fees, in some cases you get paid this fee. Below this you can see the chart where you can change your time frame. So let's say that you are trading the 1 hour time frame. You can use here the different tools, you can add indicators and so on. Next to the chart you have the order book. The order book basically shows you the orders placed on the exchange. So at the lower side you can see the people who are buying Bitcoin right now and the amount that they are buying. On the upper side you can see the people who are selling Bitcoin and the amount that they are selling. Then the right side here is where you actually execute trades. So first of all, what you can see here, you can see the margin mode. There is a cross margin mode and isolated margin mode. What is the difference? Well, the difference is that in case of a liquidation, you're gonna lose the full amounts of funds which you have available. While in case of a liquidation, while using the isolated margin mode, you're just gonna lose the initial margin posted. Now, what is important for you guys to know is that if you trade the way that I'm gonna show you, using our spreadsheet and having a strict risk management, you're never gonna get liquidated because you're gonna have stop losses. So so the chances of you getting liquidated are gonna be close to zero. Therefore, it doesn't really matter if you're gonna be using the cross margin or the isolated margin, because normally people are like, oh, the cross margin is so dangerous, I'm gonna use the isolated margin. Well, if you trade with strict risk management, that's not really the case. I personally use cross margin the majority of the time, and since I started to trade with strict risk management 5 years ago, I never got liquidated and I trade full time, guys. This is my main source of income which I used to provide for my family. So if you do this properly, you're never really gonna lose your money. Now, next to this, you can see the amount of leverage. Trading futures on Bitget allows you to trade with up to 125x leverage. What does that mean? Well, it means that you can trade with up to 125 times the money that you deposit on the exchange rate. So if you add the $100, you can trade with up to $12,500. Should you do that? Well, not really. Using such a high leverage is no different than gambling, and unless you wanna give away all of your money, it makes no sense to do it. Below that, you can see the options to open a trade or close a trade, as well as the different order types which you guys can use. There is a limit order and a market order. What is the difference? You use market order when you want to enter at the current price. So if I switch between the two, you can see that with the limit order you can actually add the price at which you want to enter. So let's say that I believe Bitcoin will go to $50,000 and then it's gonna go up. That's when you use limit order. You use limit order when you want to enter at a different than the current price. If you want to enter at the current price, you use market order. You see that I don't have the option to add the price here. I can just add the amount of Bitcoin that I wanna buy or the USDT value. So let's say that I believe that Bitcoin will start pumping right now. In this case, I'm gonna use market order because I don't wanna get at a lower than the current price. I wanna get at the current price, right? Because I believe it's going up straight from here. So in this case, I can just buy one BTC or any other amount. You also have the option to add take profit and stop loss right here. All you have to do is just to enable this option and then add the value. So for example, if I want to enter one BTC at the current price, I can right away say a take profit at, let's say, $53,500. I can also set a stop loss here at $52,000. So if I enter this trade, I am basically betting that Bitcoin will go up to $53,500, but I'm very aware that it might not go there and it might dump, and in this case I want to be protected, so I am placing a stop loss at $52,000. So if I enter this trade, one of the two things will happen. Either Bitcoin will go to this price and the trade will be automatically closed, taking the profit, or the trade will go against me and I will be stopped out again automatically at $52,000. That's how you open a long trade. You just have to click on buy long, and if you want to enter a short trade, here is what you do. Let's say that we believe Bitcoin will dump right now. In such case, we would want to enter with a market order. Let's say that we want to short one Bitcoin. Then for take profit, we're gonna have to actually add a lower price, because when you short, you are betting that the market is gonna go down and you want to profit from this move down. So let's say that we believe Bitcoin will dump to $50,000. That's what our take profit is gonna be. Yes, Bitcoin is $52,400 now. Again, when you are shorting, guys, you are betting that the market is gonna go down and you wanna capitalize on this move down. So that's why your take profit is lower than the current price, and the stop loss is actually gonna be higher than the current price. So as always, we wanna be protected in case we are wrong. So that's why let's say that we wanna be out of this trade if Bitcoin actually goes up to 53,000. All you gotta do in this case is just click sell short, and one of the two things will happen. Either Bitcoin will go down and we're gonna make money, it will hit $50,000 and the trade will be automatically closed. This is if we end up right, but we might also end up wrong and Bitcoin can pump to $53,000, and in this case we're gonna be stopped out. I'm showing you here, guys, how to execute trades with some random numbers, but the reality is that you don't do this with random numbers. You gotta have a strategy which basically tells you exactly when to enter a trade, exactly where to place your stop loss, and exactly when to exit a trade. And as I already mentioned, you guys can learn such strategies by getting our free course here, but that's not the only thing that you guys need in order to trade successfully. You also need to apply strict risk management. What is risk management? Risk management is basically risking a certain amount of your account on any single trade, because as I already explained you guys, you're not always gonna be right. We were talking about entering a short trade here and taking profits at $50,000. Now this trade might or might not work out, therefore we cannot bet the house on that, right? You gotta have a strict risk management because many times you're gonna be wrong. So you want to limit your loss when you are wrong. How does this work? Well, you use our crypto trading journal for that purpose, and specifically the position size calculator. All you gotta do is to add your account balance. Let's say that you have $1,000, to add the entry price. So in this case we were talking about entering a short trade at the current price $52,400. So that's the price you're gonna enter here, $52,400. The stop loss price, we said it is gonna be at $53,000, but the stop loss price, you guys are gonna be getting it from your strategies. This is not a random number like I explained. You gotta have a profitable trading strategy and you gotta follow it strictly. So let's say that our strategy tells us that the stop loss should be at $53,000. You're gonna add here the stop loss price at $53,000. You can or not add the take profit, right? So if you have a take profit, you can add it. If not, that's fine as well. The journal will still give you the amount that you gotta buy. Let's actually add our take profit because we added it here. So our take profit is $50,000. Now here is the most important part, guys. Percentage risk on trade. What percentage should you add here? If you are a beginner, I suggest you risk 1% or less of your account on a single trade. Actually, if you are just starting, I suggest you use the demo trading. And I can actually open it real quick now to show you how this works. All you gotta do is go to demo trading USDT settled futures. So what you will see here is that the demo trading looks exactly like the real trading. The only difference is that you are trading with fake money, guys. So you get to learn without risking any real money. If you are a complete beginner, I suggest you learn that way. Let me actually show you how to open this trade that we just mentioned. So we wanna market sell Bitcoin. Our take profit is $50,000. Our stop loss is 53,000 or 53,500. What did we put here? 53,000. Okay, so 53,000. We have $3,000 available in the demo trading, so we actually gonna change this balance right here, and we want to risk 1% of our account on this single trade. So right here the journal automatically calculates you the amount of Bitcoin that you have to short, and that is 0.05 BTC. So now you get this number from our trading journal and you actually add it right here in order to execute your trade. You can see the liquidation price here, which is $112,000, but as I already mentioned, guys, when you trade with strict risk management and with stop losses, you're never really gonna get liquidated, because in this case we're gonna be stopped out if Bitcoin goes up to $53,000. So it's impossible to get liquidated. Now one more thing that I have to share with you guys before we actually enter the trade is the leverage. What leverage should you use? Well, let's look at our numbers to figure that out. Our account balance is $3,000. The capital needed to open our trade is $2,620. This is equivalent to 0.05 BTC at the current price, right? So if we have $3,000 and we need $2,600 to enter this trade, are we gonna use leverage? Does it make sense to pay funding fees for the leverage if we have the capital needed to open this trade? Well, it doesn't. So therefore you can lower your leverage to 1x, confirm, and then enter your trade. $50,000 take profit target, $53,000 stop loss price, 0.05 BTC, sell short, 1x leverage, confirm, bam, we have the trade open right here. That's how you enter trades when you have all the capital needed. But what if I want to enter multiple trades simultaneously? Well, in this case you're gonna start using leverage. How much leverage? Well, let's say that I wanna enter a short trade on Ethereum. So let's say that I believe Ethereum is gonna dump as well. My strategy tells me that Ethereum is gonna go down to $2,500. But I also want to be protected, so if Ethereum goes up to $3,100, I'm gonna exit this trade. Again, you get these numbers from your strategy, guys. Then once you know these numbers, you go ahead and use the trading journal in order to figure out how much you actually gonna need to enter this trade. So our entry price is $2,921. Our stop loss price is $3,100. Our take profit price is $2,500. We wanna risk 1% of the account. This brings us with $490 capital that we need and 0.17 Ethereum to short. So we actually gonna go ahead and put her 0.17. And in this case, are we gonna need to use leverage? Yes, we're gonna need to use a little bit of leverage, because you guys can see that we just have $380 available. In this case, you can increase the leverage here in order to be able to open this trade. And let's add the numbers again here. So we wanna short 0.17 Ethereum. Our take profit is at $2,500. Our stop loss is at $3,100. Sell short and confirm. Bam, that's how you enter a trade. And again guys, as you can see, we adjust our leverage based on the amount of money that we need. So if you have the capital needed in order to enter a trade, you don't actually have to use leverage while paying funding fees if you have the money. That's like having $100,000 in your bank account, keeping it there, not using it for anything, and getting a loan $100,000 to buy a house. Why getting a loan and paying interest on it if you have the money available sitting in your bank, right? Just like here, if you have the money available sitting in your trading exchange, why not use it? Why using leverage? It makes no sense. You only borrow and use leverage when you need more money than you actually have on the exchange. And you decide how much more money you need than what you have on the exchange by doing what I just showed you, right? Trading with street risk management, calculating your position sizes, being aware of the risk that you are taking. In this case, I have two trades. What's the worst case scenario? The worst case scenario is that I lose these two trades. How much money am I gonna lose? I'm gonna lose 2% of my account, guys. 2% of my account. I'm not gonna get liquidated. I'm not gonna lose my shirt. I'm gonna lose simply 2% of my account. What if I wanna play a little bit more aggressive? Well, you're gonna use our journal and you're gonna add here a bigger percentage. You can add 2% per trade, 3% per trade. Should you do that? Well, if you use demo capital, it's fine, right? To play with different numbers and to see what's going on. But with real capital, if you are a beginner, I suggest you risk very small amount. When you gain experience in the future, you can risk bigger percentage of your account. When you have a lot of experience, when you know the statistics of your strategy, when you know the drawdowns, when you know all of these things, you can risk bigger percentage here. Okay, so I just showed you how to open trades. What about closing trades? Well, closing trades is very simple. All you guys have to do is scroll down here to where your positions are and just close the position that you wanna close. So in this case, we're gonna close this BTC trade, confirm, bam, we close it. We wanna close the Ethereum trade, bam, we close it. And that's pretty much how you trade futures. Demo trading and real trading. It's the same thing, it's just with demo trading you get to learn without risking any real money, and that's what I suggest you guys do when you are new to this. Now let's actually switch to margin trading. To switch to margin trading, you have to hover over spot trading, click on margin, and that's how the margin trading looks like. It's very similar to the futures trading. You can choose cross margin or isolated margin. You guys already know the difference. The cross margin allows you to use up to 3x leverage. The isolated margin allows you to use up to 10x leverage. So as you guys can see, one of the differences between using margin and using futures is that you actually have much lower leverage, and that's totally fine. Apart from that, trading margin is just like trading futures, but there is no option to demo trade using margin. That's why if you guys are new, I suggest you to stick to demo trading futures, and when you gain experience there, you can actually switch to trading futures on a real account or trading cross or isolated margin.